Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, February 10th, 2023. It's now 7:05 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 2 count. And to negate that for end of day today on the 10th, there must be a close above 4111.08 for the price flip to the sell setup count 1. Price has a chance to regain the initiative and get back above the disqualified by TDST lines, and that will become qualified along with the relative retracement up 1, which is currently disqualified. Both will become qualified if that happens. Relative retracement will become qualified with a close above yesterday's bar at 9. Have a rebound to the upside big time and get above the disqualified momentum up for 50% and 100%, and that becomes qualified too. Along with the exhaustion levels, here's 50% and 100% really bumped up. So that was quite a strong downdraft to get under the conversion line and the by TDST levels. Price found support at the first trend factor down 1. There's support at the low channel 3 here, or channel 3 low. Under there is the relative retracement and the baseline pretty much right together. Price in the pre-market hours for the S&P 500 at 7:10 a.m. is 40.59. So for now that puts price in between the trend factor down 1 and the channel 3 low. I'll turn lines on now. And that steep angle demand line became disqualified as I expected. It would have had to open under this level 4126.14 to have any chance at becoming qualified, and it did not do that, so it's disqualified. There are 2 ongoing demand lines left, one right here next to the relative retracement, and another one down here below the disqualified sell TDST right here. And that first ongoing demand line is at 40.05.26, and the one at the bottom is at 39.43.68 for today. So that first one is right next to the baseline and relative retracement line there, so you would think that would be good support. And the economic report for today on the 10th here is the University of Michigan Consumer Sentiment Index and expectations for inflation. And I have a chart for the consumer confidence sentiment there. Let's pull that up. And you can see it's been taking a tick up since hitting the bottom in December. And the KST for it is still way down in the dungeon here. It got as low as 2009, great financial crisis, and is starting to tick up, but has yet to cross its signal line. And it has hooked around a bit here, so there's nowhere to go but up for sentiment for the consumer. And the initial jobless claims for yesterday on the 9th beat a little bit, according to MarketWatch. I believe they used the Wall Street Journal to get their estimates, and it beat by 6,000. I guess that was not enough. Same thing with continuing jobless claims. It beat a little bit, but not enough. And all these huge tens of thousands of layoffs at big technology companies and big fat cap megatechs and the likes of them are really not going to hit until possibly the middle of the year or beyond a little bit, because those big huge corporations have to give those mass quantities of victims of layoffs plenty of notice, so they get like 3 or 4 month notice, say, hey, we're going to cut everybody in June or July. So this has yet to hit, and when it does, it's going to hit like a tsunami, and it's already starting to look like bad news is starting to be bad news as far as that is concerned. So that bad news is good news regime is starting to shift the other way, where bad news is going to be bad news and good news will eventually be good news. We're already seeing some of that these days. The S&P 500 support and resistance levels big board chart shows the lone gray area at the daily horizontal support from 04/07/2021 at 40.68, and price in the pre-market hours for the S&P 500 at 7:41 a.m. is 40.64. So to the downside is the weekly 65 EMA, the monthly 12 simple moving average, the 21 EMA, 20 simple moving average, S1, and the downtrend line from 06/03/2021, along with the daily channel 3 low. And to the upside is trend factor down 1, the weekly diamond bottom uptrend extension, and weekly high channel 3. And the S&P 500 daily AD line fell under its 21 EMA signal line, and the NASDAQ 100 daily AD line is 1 point above its 21 EMA signal line. And the New York traditional McClellan breadth oscillator to get back to zero would require 2,828 advancers over decliners to get back to zero. So that's solidly under zero and took one heck of a leg down from where it was yesterday. Have a great day.